Hello, everyone, and welcome to this edition of Investing and Trading Live. As always, my name is Josh Lilquist, and today is Saturday, July 8th. We had a short trading week. We talked about that a few times this week, and today on this session, we are going to do a stock market recap. We're going to talk about the S&P 500, silver, the Russell that outperformed this past, especially on Friday. We will get into some supply and demand analysis. We have a few ticker symbols coming off of supply and demand. So we're going to talk about that here today. So make sure to smash the like button if you do like the show, and add any comments or questions that you do have that we can cover in the upcoming sessions. But without further ado, let's get into the uh, the session here. And let's talk about some of the different opportunities we have coming up here in the next few weeks with the market recap. So for our YouTube viewers, we do have the screen up. We are looking at the S&P 500, and this has been one of those we've been looking at for several sessions here on the show. Now, the S&P 500 is still holding off of that supply zone that we've been talking about at 44.44 up to 44.50 area. Now, one thing to keep in mind here is we do have this demand zone right underneath there. So I'm looking for this to potentially be range bound until one of these two break here. We do have this demand zone did take out this previous high, so this might have some strength here. But once we get down there, we'll see what happens to that on the S&P 500 ETF. So that's the S&P 500. Actually the week ended at 438.55 on the week for the S&Ps. The Dow ETF, which is the DIA, the diamond, this one ended the week here at 377.43. This one has been showing some weakness, down 0.5% on Friday. We got Friday. So we had about a drop of, looks like about just over about 1% with the Dow this week. So not too good of a week with the Dow. The S&P 500, I believe, was also down. Let's just peek at that. Actually, the S&P 500 was up for the week. Just a smidgen, as you see here. Let's peek at the Russell. Now, the Russell really performed on Friday, and it was up about 1%, just over 1% on Friday, still down for the week. So the Russell kind of doing a little bit of opposite. They're not really the Russell, the Dow, the S&P 500 aren't really following suit with each other. So, but this is still holding off this supply zone, the 1864 to 1900. I'm looking at the Russell index right now, the Russell 2000. So we have some zones that are still holding. So we'll see what happens as we progress here the next few weeks. I would assume with these different indexes, these supply and demand zones, probably within the next week, one of them will be breaking. So if you have any positions on, make sure to be protected on those and beware of potential changes in direction there. Let's pick at the dollar because we talked about the dollar yesterday with the weakness of the dollar. On Friday, dollar was down about 0.82% the way it looks here. Let's just check here. The dollar down, 0.82% on the day. And as on the show yesterday, we talked about there was some early weakness, which we would probably see an inverse with the stock market and see some strength in the stock market, which we did initially. But at the end of the day, the market just gave away all the gains back. I mean, going back to the S&P 500, looking on a 1 hour chart, you can just see here how the last 2-3 hours of the day just cratering back down. So basically giving away all the gains it had. So will we see some strength in the U.S. dollar on Monday? We'll see, but it did close pretty strong at the lows, roughly at the low for the day on the U.S. dollar. So we'll continue to monitor that because we like to monitor the dollar. That's kind of the king that rules a lot of different things. So that's your your US dollar and the indexes, let's look at silver. I wanted to talk real quick about silver because silver has been in a demand zone that hit back on June 22nd. Now, when we trade supply and demand, we're saying there's odds of institutional order flow there. In this case, it's a demand zone and institutional order flow, buy orders in the market. So, and we can just put this yellow, make it look good. So, when you have odds and probabilities in your favor, you don't have to be right every single time. In trading and investing, it's not a be right every time game. This is a odd and probability if you want longevity, but also consistency in the markets. So if you have small risk and higher reward, that's where you have that's where things change for you. So rather than just hoping things go up or hoping things go down, actually have a position where you have that risk management set before you even enter the trade and know when you're going to get out before you exit the trade. And also know when you're going to get out when you're wrong, because that's one of the toughest things in trading and investing is realizing or admitting when you're wrong. Us as humans, we don't want to admit that. So that's why we got to keep that risk small. That way you can continue to take those small calculated risks and it doesn't change your mindset or your emotions in trading and investing. But going back to silver, closing out the week at 21.18 on the week, still holding off that demand zone, but really it's been there 2 times, actually 3 times. So this one here has probably been eating up a lot of the demand orders in there. So it's not as strong as I would expect it to be, but then again, still could continue to go up here. But I would say the next test probably will break through there. So make sure you're protected on those if anybody is in any silver ETF trades. This is the SLV. Looking at gold, GLD, ending the week at 178.64 on the ETF. Still in this pretty steep downtrend, roughly down about 6.6% from the highs from back last month in June. Actually, it would be May. Towards the beginning of May as the highs. So this one continued to show weakness, and it is low on the percent Bollinger Band. I don't use the percent Bollinger Band to trade and invest, but just to kind of see where it's at relative to where it's been for potential supply and demand opportunities to turn price. Let's peek at the energy sector. Oh, that's right. This is the mining. Energy sector is XLE, ending the week at $80.79. Now, there was a headline I just saw here about the energy sector, and it was kind of interesting. Where did it go here? News. Well, it's changed here now. Let's see if I can find this news. Go to view all. It was about the energy sector. Let's see. Oh, I'll find it later. Anyway, so with XLE in the energy sector, this closing pretty strong at the week. The oil market, USO, might be mirroring that, and it did. So really, if this has been range bound for a couple months now, 2-3 months here, with USO and XLE both being strong at the same time. XLE has slightly started an uptrend for the last 2 months here, but USO could be breaking out of this range. Let's see if there's any supplier demand zones nearby where it could be tested. Nothing really good. You have something right here at the $68 area, but not very strong. I would see this could potentially go back and test the highs from April at $72 $2 per share on the ETF. So let's continue to monitor these XLE and USO on the ETFs. Let's look at some cryptos. By the way, in the next few weeks here, the Fed could be potentially rolling out a Fed-backed really a crypto coin with from the central bank, and they're going to be calling it CBDC. It's central bank digital currency. Now, the problem with this is if that happens, that could control really is Big Brother watching us on now. This could be controlling what we spend our money on, could be controlling how we spend it, where, everything. And this could be devastating for the financial markets, but also really potentially could hurt the crypto market because if they can get this established, I mean, I believe there would be a potential for them to start trying, I guess, to ban some cryptocurrencies. So imagine this, if there was a central backed digital currency, they tell you what you can spend your money on. They control what you spend it on, who you spend it to, who you donate to, everything. Could be one of the biggest freedom grabs in history. So continue to pay attention to this stuff because this could be big moving forward with this digital currency, that the digital dollar that the central bank is going to be trying to launch here in the next potential few weeks. So, but going back to the crypto market, cryptocurrency currently, since this is a 24/7 market, the Bitcoin is at 30,240 even. So it is still consolidating in this range from 3,100 31,460 down to 29,564. So really range bound for the past 2-3 weeks here. Ethereum, I've really liked Ethereum ever since it came out. I thought the blockchain and smart contracts, all that stuff, that was kind of the pioneer, to my knowledge anyway, on a lot of that stuff. This one currently at 1,863, so 1,863.50, down about $8 on the day. So cryptocurrency still, still pretty high from inception, but down from the highs tremendously. Looking at Solana roughly at 1945, and rounding out HNT at a buck 34. Sorry, a buck 35 per coin. Couple stocks here, since we haven't gotten really into stocks yet. We talk a lot about Apple, that always getting back to all-time highs. I just saw a headline on this too. The market cap of Apple, I believe around 3 trillion, is more than some of the high-flying stocks combined. I believe it was Tesla, Google, Nvidia. There's 4 or 5 different big name stocks that Apple had a higher market cap with then. So very, very powerful company with Apple, obviously innovating and bringing out new technology and just everything. The eyeglasses, the iWatch, the iShoe, the iCoffee cup, everything, it feels like. So congrats to Apple here. But it is at near all-time high, well, roughly right around all-time highs, about a buck short of it right now, $2 short of it. That being said, is Apple a buy? Well, could it go higher? Sure, it could. But you do want to be careful that what goes up must come down. Things can't go up forever, and it's just the way the market works. So be careful with any trading or investing with Apple. Closing the week at 190.68. Nvidia, that one obviously coming off that major move back on in May, towards the end of May. So let's this consolidating a little bit, but ending the week at 425.03. Tesla ending the week at 274.43, has been pretty strong over the past couple months here, really since the beginning of the year, end of December, but still off the all-time highs of around 400, down about 34% from the all-time highs. But on the year, up around 160%. So showing some pretty good strength here the past few months here, 6 months or so. Meta, same thing, up roughly around 230% from the lows back of September. So with Meta bringing out Threads this past week. I believe on Wednesday, Threads was launched, and I think they said 70 million subscribers within the first day or first 2 days. So congrats to Threads. Now, what that could potentially do is open the door for companies like Snapchat and doing a spin-off on that. Companies like TikTok, companies like whatever other those social platforms that are out there, bringing it in and just getting a small piece of the market share. So, let's keep an eye on some of these other companies, especially like Snapchat, very, very low on the totem pole here right now, down and really sitting at the same price roughly for the past year or so, around 10, between 8 and $10 per share, down from the highs of around 89 or $80 or so. It looks like $83 per share, down to the lows there. So it's down tremendously. So let's see if they do any spinoff here to boost that stock a little bit. So Snapchat closing at 1164 on the week, and Meta was closed at 290.53. WWE closing at 107.84. Bed Bath and Beyond, we talked about this on the show yesterday, closing the week at a whopping 7 cents, but I believe that's delisted anyway. So they do have BBBYQ, which is a Teddy Holdings potentially bought it there. So who knows what's going to happen with that. Caterpillar closing the week at 245.83, showing some strength over the past couple weeks here. So trying to get back to the highs, really the all-time high actually of 264.53 the way it looks. I don't believe it's ever been that high. Yeah. So Caterpillar actually pretty strong right now. Looking pretty good in a potential uptrend as well. American Express closing the week at 169.80. And rounding out everything, I wanted to look at Activision Blizzard because there's some, you have analysts that are always giving upgrades and buys and sells and all that garbage. And just looking at some analyst ratings, and Activision was a 100% buy. So I want to look at these, and I just want to see here where price is actually at, and what they could be doing to try to pump some of these stocks up. So let's go back into that app here. Activision Blizzard closing the week at 82.43 on a price chart. It is kind of range bound, but off the lows from on the year. So up about $30, $25-$30 on the year. So they're saying it was a 100% buy. Okay. Which I don't know what you would call a 100% buy. Alphabet was a 100% buy, which is basically Google. Let's go find Google here. Google ticker symbol GOOGL. Closing the week at 119.48. This also in a pretty good uptrend up on the year. So if they're saying it's a 100% buy from the lows of October up 50%, if they're saying it's a 100% buy, you think about that. It's already up 50%. Now they're saying time to go buy. So is this time to short? Well, I would say it's probably not time to short, but you should be looking for areas or reasons why that it could go down or why it could go up. Now, could it go up higher? Yeah, they definitely could. But there's a reason why some of these are 100% buys. Let's look at one more. Here is SBA Communications. I don't even know what it is, but let's look it up anyway. SBAC is the ticker. SBAC. It's a fund REIT. Interesting. This one here closing the week at $240 per share and 85 cents. So this one pretty strong in the last week or so, but this one has been down for several. Really on the year, it actually is down about 38%. So I would say SBA Communications Corp could potentially be the best opportunity but it is in a very strong downtrend. So if you're looking at doing a buy with this, look for a strong demand zone near current price to see if it's going to give you a reason to buy that after it's dropped this much. So, but as always, they can keep going down, they can keep going up. It's just that's where you got to put your odds and your probabilities in your favor. That way, if you're wrong, you take a small loss, no big deal. When you are correct, then you take your profits and you run. So, hope you guys enjoyed the session. If you did like it, make sure to subscribe to Investing and Trading Live on Apple Podcast, iHeartRadio, and Spotify. We are live on the YouTube stream here as well. So if you have questions, make sure to pick any or type any questions in. Smash that like button. It's good for the algorithms. And subscribe to the YouTube. And we'll continue to deliver content every single week here. 4 sessions, typically on a Thursday, and then one the majority of the week. Potentially not Sundays, but most trading day during the week. And then we're going to try to do one on Saturdays as well, since it's been pretty popular. So as always, until next time, retire young, my friends.